Hello, and welcome to another episode of Get Your Fill Financial Independence and Long Life, where we explore ways to achieve those two goals. And one of the ways to have a happy, financially independent life is not to pay a ton of money in student loans. And that's why it's cool that we have Jack Wang here with us today, because Jack Wang helps families. So if you have kids that are like, middle school, high school, and they're thinking about maybe they'd like to go to college rather than become a derelict on the street, that Jack can help that happen without breaking the bank. And he's got some cool creative ideas of how to do that. He is a financial planner, right? Financial planner, financial consultant.
Yep, yeah, financial advisor, but I
Advisor.
I
Oh, I got it all
focus
wrong.
specifically on the college space.
Yeah, exactly. So, Jack, thanks so much for being with us today. I know you're going to help us save lots of money.
Hey, Christine, thanks so much for having me on. I really appreciate this opportunity. Thank you.
So, Jack, how does it work? I mean, you were telling me before we went on the air, you were telling me about some folks who basically you help to just using tax savings that they're going to be able to send their kids to UMass Amherst. I mean, how does that work?
Yeah, that's a great question. And so, when it comes to paying for college, there's really two separate questions, right? One question is how to lower the cost, and that's where people talk about getting scholarships and getting the most amount of aid and things like that. And so you lower the bill, and there's a whole strategy to that, right? And we can certainly talk about that if you want. But then there's this whole other question, because at the end of the day, for the majority of families, regardless of how much in scholarships or aid that they're going to get, there's still going to be some amount that's left, right? They're going to have to still pay something. And so how you pay it can be just as important as lowering the cost. And so for most families, they think about paying the bill in a very binary way, right? Some families have the money saved up, right? There's some families that, hey, the day my kid's born, I'm going to start saving for college. I can tell you with my own kids that did not happen because I was trying to get sleep and it was up to my eyeballs in diapers and onesies and things like that. Or if you don't have the money saved up, then of course, then it becomes, well, I got to borrow, right? Or my kids got to borrow. And this is all the stories about the student debt. And, my kid graduates with $200,000 in student debt and so on and so forth, right? We see plenty of those in the news. But the reality is, it is not that just that binary choice. There can be many other strategies. So strategies that could be financial strategies that could involve intentionally taking debt, not because you want to saddle yourself with debt, but rather using debt as a tool to, let's say, bridge the time from beginning of college to end of college. Or there are a number of tax related strategies or a combination of all those things. And so oftentimes there can be ways where, like the one family we were talking about before we came on air, we're going to use tax related strategies to pay for all of an in-state school, right? Just from income tax savings. I like to call that the IRS scholarship, and there's no essay required for that, right? But it's beyond what most people think, because in the news we hear about, well, you guys, hey, you better start saving because college is expensive, or you take on loans, right? And very few people really sit down to figure out the strategies beyond that. And so, by the way, I should just point out here that anything I say here is for educational and entertainment purposes only. I can't speak today. This is not advice. They should talk to their own tax account or financial advisor, right? But I'll share some basic thoughts and stuff. But now that that's out of the way, I can I can say stuff.
Now get the legal crap out of the way. We can move on.
Right?
Yeah.
So yeah, so there are a lot of different things, and so it's really not much different than doing taxes. And I know, for the majority of the country, right, people hate doing taxes, hate thinking about taxes, right? Taxes is just one of those things that it's just sort of this unfortunate truth. Um, right? But if you think about this, okay, um, when you sit down to do your taxes, whether you're using software or you're going to someone, and right before you hit that submit button or right before you sign it, right before you submit your taxes, if you then, at that point in time, if you then think and wonder or ask, hey, how can I save more in taxes? Right? It's too late, because remember, the tax return only shows what has already happened. And so, in the same way, financial aid and filling out financial aid forms is very much the same way. It shows what has already happened. And so, if you want to be very efficient about your money and use some of these strategies to pay for college, you have to do so before filling out the financial aid forms. Right now, granted, I help clients. Sometimes clients, their kids have already started college, and some of these do work still. But the maximum impact is you start years before. And so what I'm so by the I'll say it this way, by the time people fill out the financial aid forms, their finances or these strategies are have already taken place, so that you fill out the form after having done these things, so your finances are positioned in a way to either maximize aid or you maximize some of these other strategies, right? Whichever the case may be. And I will just say that, a lot of these things, the more time you give it, the better, the more impact you can have. Obviously, time helps. But the reality is most families don't think about college until they're into high school, sophomore year, junior year, typically. And these strategies certainly do work, but it would obviously be more impactful if they started a little bit earlier.
So, Jack, are we talking about like, you're saying that they're going to change the way they look on paper, basically, right?
Right.
So like, I'm going to quit my job and, not have as much money, or like what can you give me an example of like what sorts of things I could do, like, or my sister could do today to get my nephew who's 13, get them in a better place for like when he goes to college?
Right. So, so that's a great question, and it's all about understanding how aid works. So let's just leave scholarships out of it for the moment, right? Um, but I'll give you a real estate related example. So the first rule is always you try and maximize as much aid, scholarships or financial aid. So different schools use different formulas to calculate financial aid. There's two different formulas. One formula completely excludes the value of your primary home. So even if you have $1 million home with no mortgage on it, right? So you have $1 million equity. Well, some schools that's just a big fat zero. So if you have that situation, you might want to apply to those schools because it might help your financial aid profile, right? Because
Yeah.
it's not counted as an asset. Versus other schools do count the value of your home equity. So that $1 million home with no mortgage, with $1 million equity, there are a number of really well-known schools that will look at that and basically treat it as if you just had $1 million laying around your checking account. So obviously there, you're going to probably get less financial aid, even though everything else is the same.
Yeah.
So we always start there. But then oftentimes you see on the internet, people talk about, well, you shouldn't save in your kid's name because, any money in your kid's name is, counts more heavily toward financial aid or hurts your chances. Okay, and that is actually true, right? Does it count more heavily? The answer to that is yes. But depending on your situation, you might want that. Because you know why? Your kid probably doesn't work or doesn't work as much as you, the parent, which means they're probably in a substantially lower tax bracket or in a 0% tax bracket. So if you are saving in your kid's name, instead of saving your own name, end up having to pay a lot in taxes on interest and dividends or whatever, you might want to save in your kid's name and pay zero taxes.
Yeah.
Right. So that, again, everybody's a little bit different, and it depends on how you save and where you save. But now you start to introduce that element into it to where, hey, you know what? if I'm going to have to pay taxes anyway, why not pay less or zero?
Right. And then that money, essentially could be considered found money that you could put towards the kids' college education.
Exactly, right? So again, I like to think of it as the IRS scholarship, where if you're going to have to write the check, would you rather write it to the IRS, or would you rather use the money to pay for college?
Yeah.
Now, granted, you have to pay the money anyway, but for most people, using it to pay for college is a lot less painful than having to send it to the IRS.
Yeah, that is painful. So, Jack, how did you get into this? Is this what you did like right out of school? You just jumped into this field, or how did you get interested in it?
No, so I've always been interested in finance. I was unlike a lot of kids today, I pretty much knew what I wanted to do. I mean, yes, there are kids today who know what they want to do, but I tend to run into far more kids today who are like, well, I'm
No
going to
idea.
college, but I'm not really sure what I want. Which is quite common for an 18-year-old, right? It's hard to sort of map out your life at 18, 17 or 18 years old. But I knew I always wanted to go into some sort of finance. I started my career in banking. But what really drove me down this path was very similar to what a lot of other people experience in terms of a personal experience that leads them to do what they do today. And for me, that personal experience was getting divorced. And at the time, my sons were sort of my older son was in high school, my younger son was still in junior high. So college wasn't that far. And so part of the divorce decree, we had to figure out how my ex-wife and I were going to pay for college and what was fair and what have you. As it sort of just so happens, I was playing on a men's baseball team at the time. And one of my teammates was a financial aid officer for a very well-known college here in the Boston area. And so in between innings, he was our starting shortstop, I play outfield. And in between innings, I'm just peppering him with just questions for selfish reason, right? Because I wanted to know because it was going to help me figure out this divorce thing. But I realized that, wow, a lot of people don't know this. A lot of my neighbors and friends, fellow parents don't know this. And even a lot of the information today, even with Google and stuff, you really can't Google a lot of these details, right? Or I suppose it's one of those things that technically you could, but you would have to even know the right question to ask to
Right.
begin,
Right.
right? So for
Exactly.
most people, you would just never end up there.
Yeah.
So there's all these details. I realized, wow, this can be really helpful. But the honest answer is I started for selfish reasons, right? I needed to know. I wanted to know from my own situation. And the more I started down this path, the more I realized, wow, so many more people are in the same boat, married or not, right? That can really help. And of course, we can see the effect of folks not getting the help because and all the things that go into this because there's no shortage of student debt stories out there,
Right. Exactly.
right? Student debt only comes from you buying something that you couldn't really afford or didn't have the money saved, right? But it's different in real estate in that if you think about in real estate, the bank tells you how much you can afford, right? You qualify for a mortgage. And if you want to buy more house than what you qualify for, you have to have the cash to put a bigger down payment.
Right.
So you're capped at generally what you can buy, or some people go lower, right? Maybe,
Yeah.
to keep their payments lower, what have you. But college is pretty much the only thing where it goes the opposite because of how student loans work. So, I might only be able to afford a $20,000 a year college, but if my kid got into an $80,000 a year college, there is a mechanism for me to be able to do that, right? So now I'm stretching to buy something that I couldn't really afford,
Right.
and poof, student debt, right, or
Mhm.
parent debt.
Yeah.
Right?
And you think of
It
it
doesn't
like,
really happen anywhere else in our
right.
economy.
But in the real estate example, right, you're expecting your property to appreciate. And when you
Right.
send your kid to school, you're expecting them to appreciate. But kids spend 80,000 in school and then they get into public service, and you're like, you're making 16
Right.
grand a year, kid. You're really killing me here.
Right. Exactly.
They don't that
But
investment doesn't always appreciate.
right. Yeah, and there's no shortage of stories out there about how, little Sally or little Johnny went to a top tier school, but then when they got out, they couldn't get a job. So now they're working at Dunkin' Donuts. No offense to anybody who works at Dunkin' Donuts, right? That's not really the point, but they're working at this job, making next to no money, but they have this huge debt burden. And now you hear the stories, they'll never be able to buy a house, they can't even buy their own car, they're living in their parents' basement, on and on and on, right?
Yeah.
But that doesn't have to be the case.
Yeah. Yeah. That's fantastic. So yeah, so out of your own, need, right? Which is not selfish. It's just like, happened to be the path that led you there. So you ended up specializing in this. And what was sort of the first thing that you kind of discovered when you started thinking, okay, this is like what I want for it to be a specialty? Was there anything that kind of surprised you when you started niching down?
Um, what I what I was really surprised with was that just how few people actually know about this. And what I mean by that is there's no shortage of articles on college planning, right? How to get into college, how 529 accounts work, for example, average cost of public school versus average cost of private school. There's no shortage of that. But when you get down to the nitty gritty and people ask, how do you get more aid? How do you get more scholarships? How do you really pay for this if you don't already have some of the money saved? Um, there's relatively few sources out there that really get into detail. And I will tell you, in doing this for years, no one that I've seen really talks about how to maximize aid starts with what schools you should even look at, right? That's that first question. How do you lower the cost? So, and we see this in national data, and the pandemic exacerbated this trend, which is where it had always been was really sort of this 80-20 rule, right? 80% of the high school applications go to the top 20% of colleges, right? And these are all the names that everybody knows no matter what part of the country you're from, right? Your MITs, your Harvard, Stanford, Northwesterns, the flagship schools, Michigan, North Carolina, things like that. So they're inundated with applications. And in the absence of knowing anything different, right? And this is also a legacy thing, like, hey, my kid has to go to a brand name college or their life is over, type of legacy thinking, right? It's no wonder that these schools get a ton of applications. Well, but the other 80% of colleges in the United States are left scrambling for the other 20% of applications. And then on top of that, the differences in the aid formulas. So how much aid you get to just lower the bill, right? Never mind pay for it, but just to lower the bill begins with, starts with what schools you're even looking at. So this would be, I suppose, in the real estate world, would be like you want the worst house in the best neighborhood, right? It's a saying that I've always heard. Or even in this inflated market, there can be pockets of value, pockets of opportunity if you look in the right places, right? And that's true of anything, right? Stock market, right? There's always sort of whatever you can buy that's a good deal versus having to overpay. Well, college is no different. So the thing I like to sort of equate with college and people trying to cram into this top 25% would be like if you and I walked into a Ferrari dealership, right? And this is the part that then parents sort of expect. They're like, hey, we're gonna walk into the Ferrari dealership. We're gonna try and buy Ferrari, but we're gonna hope that the salesman takes pity on us that particular day. So they're gonna give us the $300,000 Ferrari for $10,000. Meanwhile, behind us, there's a whole line down the street, around the block, of people ready and willing and able to write a check for the $300,000 that it takes to buy that Ferrari, right?
Right.
It'll never happen, right? It'll never happen. Which of course then it goes to the point of we have to then question, is a Ferrari really a better car than like a Toyota or something, or like a Chevy? And that's a whole
Depends what
nother
you're going to do with it, I
conversation,
guess.
right? So part of this process starts with that. Um, and like I said, there's a whole strategy behind that of where to look, how to look, and so very few. Back to your original question, there's very few people who even just talk about that, because the way that college typically goes is this is, hey kid, go out and find the right college, right? And kids get names from all different sources. I mean, for years, Cinderella schools that made the March Madness tournament would always see a pickup in applications the following year. So, like a no-name school that went deep into the tournament, next year they would get a ton of applications because they were on TV, right? Their team did well. So kids get names all over. So basically, hey kid, go out and roam the countryside to find the best college for you, and then we'll figure out how to pay for it later.
Yeah.
And what I'm saying is you can't really do that, right? If you want to pay a little later, you sort of have to guide that search more, because inevitably, if we did that with our teenagers and in terms of how they buy cars, they would inevitably end up at the Ferrari dealership.
Every kid would have a Ferrari.
Right? And what they would say would be the same exact thing what kids say about college. But mom, but dad, it's a great car, and all my friends are getting one, and right. They say, well, all my friends are going to XYZ school, and it's a great school for this. Okay, in the meantime, you're staring down the barrel of a huge tuition bill,
Yeah.
right?
But it's
Really
that's
is no
actually,
different.
when you put it like that, like I just thought about it from like the kids' perspective. I mean, first of all, they're saying to you, "Oh, what do you want to be when you grow up?" And there's like, 600,000 different occupations. And now added to that, it's like, where do you want to go to school? And there's like 300,000 schools. And like, geez, I can barely, balance my checkbook, or of course people don't do that anymore, but like I'm so overwhelmed. I'm just barely out of puberty here, and you're wanting me to make these gigantic decisions that they're not really qualified to make, right? I mean, it's huge. It's just a lot of stress. And I hadn't really thought about it until you just said that, because that's what people say. Where do you want to go to school? Like, well, I don't know. Like, how the heck should I know? I don't even know. Why don't you give me a list of the 300 colleges that are just right within, 50 block radius in Massachusetts, like, I don't even know.
Right. Yeah, exactly. And ego plays a lot into this, right? Still, if you are, if you're if you know that you're getting together for Thanksgiving dinner with extended family, and you want to be able to brag to that crazy aunt or uncle or something, oh yeah, my kid goes to blah 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 school, right? I mean, that's a huge part. Make no mistake, nobody will ever really admit to it, but it is a huge part of this, which again leads to why 80%, now probably more like 90% of college applications go to the top 10 to 20% of schools, because you want to be able to say at Thanksgiving time, hey, I go to, right. It's like all those bumper stickers that people drive around, right? Like, my kid is on the honor roll at blah 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 school. Like, great.
Yeah,
I
you're a
don't
complete
care.
stranger to me.
Right. Good for you. Good for them. Okay, fine. It doesn't detract from what my kid's doing. So I don't really care. You know.
I know. That's funny. Those things crack me up. Nothing against people who have that, but I'm just like, you're telling complete strangers,
Right.
like bragging on your kid, like whatever. Like, I don't even, okay, good for you. Congratulations. I don't know. But yeah, so when you start working with somebody, Jack, somebody comes to you, hopefully they thought to do it while the kid was still in middle school, but let's say they're not. Let's say they're like halfway through high school, and they're like, okay, oh man, you know, how am I going to get my kid to, if they come to you and say, my kid wants to go to Harvard, what can we do? What do you just like, what do you do with that?
Yeah. So so stuff like that happens pretty regularly.
I had a
Um,
feeling.
the whole, yeah, the process really doesn't change. It is, how do you position the family to first maximize aid to lower the cost, right? Now, if a family is truly insistent, look, my kid needs to go, it's Harvard or bust, or something like that, right? Which I do get quite a few of. Okay, you have to understand that Harvard does not give out merit scholarships. So no matter how good your kid is or whether or not they've cured cancer, Harvard is not giving you any kind of merit scholarship, period. So in those cases, it really comes down to paying. And so this is where I look at the family finances, and this is where some of those strategies will come into play. So I'll give you some examples. Some of the crazier examples, but a
Those will be the
simple
fun
one, yeah. But a real simple one is, let's say, so this is a pretty common example. So parents work for a company and they get stock from their company, right, as part of their compensation package. And they were just going to sell off the stock to pay for college. Now, it can't work in all instances, but one strategy can be is, well, if you're going to sell off the stock anyway, you're going to pay capital gains tax. So why not gift the stock or the investment to the kid and let the kid sell it at a much lower tax rate, right? So again, if you're going to sell it anyway, do you want to pay like 15 or 20% taxes, or you want to pay like zero, right, or close to zero? Right?
Yep.
Now, in that particular scenario, there is something called a kiddie tax, which is a provision to sort of prevent abuses of what I just talked about. So this is where using debt can come in real handy, which is, okay, borrow for college. And people say, but Jack, I have the money. I'll just sell. Why do I need to borrow? Like, okay, just hear me out, right? Borrow for college. And using federal student loans or federal loans anyway, there's no payments while they're in school anyway. Then when your kid graduates, they're an independent, they're adult. They're no longer subject to this thing called the kiddie tax. So then have your kid then sell the stock at that time, write one big check, pay off the loans, and you're done. Yes, it costs you a little bit in interest, that's true, but still, you probably save more than enough in taxes to offset the interest costs. And either way, you still got college paid for, right? So that's just one simple example. But among some of the crazier examples, right, for entertainment purposes, there for people who are self-employed, you can actually hire your own kid, and basically it's an income shifting strategy. So if you were gonna earn the money and you're gonna pay taxes at whatever your tax rate is, legitimately hire your kid. So this is not, hey kid, come do some things for pay you under the table, right? This is legitimate, like you're gonna make them an expense on the books. So it becomes a legitimate business expense for a self-employed person or business owner. It becomes earned income to the kid, but then the kid who would then I keep saying the kid, I don't mean it disrespectful. I keep saying the student, right?
Younger person.
The younger person. But the student would then have earned income, and they file their own tax return. They still get the benefit of the standard deduction, which in 2022 is $12,950. So if they earn up to $12,950, the standard deduction wipes out all that income and makes it all tax-free. Meanwhile, the business got a deduction for $12,950 that you paid the student, right, your son or daughter. So now, if you think about that, you stretch that out over multiple years. Maybe if you started this when they're in 8th grade or 9th grade, you can then pair this with debt so you can carry it through college. And by the time you do that, you have a large pile of tax-free money and a lot of taxes that you didn't have to pay. And that now can pay for college or pay off the debt, what have you. There is
the key to that, though, right, is to keep the money away from the young person.
Right, and so there is sort of this emotional or sort of philosophical argument why you don't want to do these things. And I've had parents say this with the whole gifting thing, especially. Because if you end up gifting the investments or what have you into your son or daughter's name, then legally, when they turn 18, at least here in Massachusetts, that money belongs to them. And so there's always sort of this innate fear that they're going to turn 18, cash it all in, buy the motorcycle, and just go across country, right, and forget college, or go sort of Thelma and Louise on you or something. And so so that technically could happen. Right, that is right. So there have been cases where the families have said to me, I love this strategy, it makes a ton of sense, but we're just not comfortable emotionally handling that, sort of putting that amount of cash or investments or whatever into our son or daughter's name. Okay, fine, right? That's totally fair, totally fair. One of the crazier ones was. So there's a farmer in a very high tax state, and they grew lettuce or something. I don't, whatever the crop was, didn't really matter. But they were in a very, very high tax state, and they made a lot of money. So if you look at the combined federal and state income taxes, they were close to like 45%. So here's this little twist. So if the farmer sells the crop, then it's earned income to the farmer, right? Because that's the business of farming, right? You grow crops, you sell it.
Right.
And on the earnings of the crop, they would pay 45%. But there's this little provision in the tax code. If you gift the crop to the student, okay, and yes, you can actually do that. And then the student turns around and then sells the crop, it is treated as capital gains. And for the majority of people, the capital gains rate is 15%. So again, here, if you're going to sell the crop anyway and take the money to pay for college, would you rather pay 45% in taxes or 15? Right? The answer is pretty obvious to me.
Yeah.
But this is the type of creative strategies and planning. So again, I'm not a CPA, I'm not a tax person. I just know this particular segment of the tax law really well as it relates to college planning because it's what I do.
Yeah.
But to do that, right, you can't do that the second before you sign your tax return, hit the submit button, right? Because it's too late, right? You have to think about this ahead of time and make that transfer or gift or what have you in order to do these things. And then I'll just share this one other crazy story since your focus is real estate. This rule is changing, so you can't really do this anymore. But years ago, if you owned investment property, right, like a second home, vacation home or something, or any kind of investment real estate, the value of that real estate would always count as an asset for financial aid, no matter what school you looked at. But there was a trick. If you created your own legitimate business, and especially if it's real estate, you would do like a property management business. And then the business owned the real estate. Then so certain schools in their financial aid formulas would not count the value of the business as long as it's family owned and some other considerations. So that was a way to make your investment real estate basically disappear as an asset.
Wow.
Right? Because for those schools, they don't count the value of the business and the business owns the real estate. So the whole thing would just disappear. Right? And I've had those instances. Now, like I said, the rules changing, so you can't really do that anymore. But years ago, you could do that as long as the business was a legitimate business. And so if you were a real estate investor, it wasn't really that hard of a stretch to create a property management company for yourself, right? Because you're effectively doing it anyway.
Yeah.
Now, for legal reasons, not for our podcast here, but like, I understand that sometimes you don't want to do that for legal reasons because maybe you want to put the real estate in a separate entity for, to have some legal protections in case of like a slip and fall or whatever. Yes, that's still applied. And so again, I had people tell me that, so they didn't like that strategy of, and that's fair. That's totally fair. But it worked for financial aid, right? To make properties just disappear.
Yeah. And, Jack, you're really, first of all, I want to just go back and make sure that people understand, when you're talking about the guy who's, the lettuce farmer, that you work all over the country, right? I mean, we're in Zoom land now. You don't have to be just Massachusetts based. You can work with anybody.
Right. Right. Yeah. I work with clients all over the country. It's just whoever needs the help, which really is a
Everybody.
lot of families. But it's but yeah, these strategies don't necessarily change based on geography, right? In fact, in some cases, the higher the taxes in your state, the better some of these work, right? And we certainly have an income tax here in Massachusetts, but some states are even higher. But if you happen to live in a state that has low income taxes or no income taxes at the state level, these things still work. It's a little bit less of an impact,
Yeah.
but they still can be very effective.
Cool. Yeah. And I'm just amazed I'm just realizing how important it is. I mean, I don't have kids. I don't have certainly college age kids, but my nephew's getting ready to theoretically go to college in a few years and stuff. And so it's on my mind. And as I'm hearing you speak, I'm really impressed because you have this niche, right? That you've dug down, you've explored, and you really got in there and figured out what kinds of, crazy creative options are out there, and all perfectly legal, all 100%. It's like you reminding me of when I first sat down with my first really amazing tax accountant, and he started asking me questions, and I was just like, what, like TurboTax didn't tell me I could take that right off. You know what I mean? So the value of having somebody like you, I mean, you're the first person I've spoken to who does this. Is this a common, I mean, are there other folks who do what you do in this little niche?
Um, so because I work nationally, I do know a lot of people who are in the college space nationally. I have yet to find many people who do what I do. And I don't mean to say that to pat myself on the back. That's totally not it. But it's but believe it or not, it's not typical financial advisors, right? Because the typical financial advisor, if you go to whatever firm, or even if you kind of do it yourself at an investment firm, the extent of the college planning is much like what I talked about earlier. It's, hey, Christine, here, open a 529 the day your kid's born, and I'll see you in 18 years, right? Contribute, and I'll see you in 18 years,
Yeah, exactly.
right? And that's it, right? And that's it. And hopefully you contribute enough to, or your kid goes to a school cheap enough or gets enough aid to where it actually, the numbers work, right? Most people, probably 90 to 95% of the people in the college space focus on the getting into college aspect, right? Now they can help with scholarships, certainly, and stuff like that. But if you think about the way that the world works, we talked about this, which is, hey kid, hey student, go out and find the college and figure out where you think you can get in, right? And all the questions that are typically asked, hey, what kind of grades do you need to get in? Do you need test scores? How many letters of recommendation and all that stuff? That all falls under the category of where can my student get in? And that's what 95% of the world focuses on. What I focus on, and a few others I know who do some of this, really answer a different question. That is, what schools will give you the most aid, right? Which is different, and then how to pay for it. And so it really, what I do really walks a fine line between what the financial aid rules are, what tax laws are, right? Understanding the financial tools that are available. And I don't run into a lot of people who do this. They are out there, and I do know some, but I don't know a ton.
Well, I'm psyched that you shared all this with us today. So, Jack, what do you wish I would have asked you? Like, what is it that you're burning to tell me that I just didn't think to ask, or something that you really want to share and make sure people know?
Um, I think that the thing that I would like people to know the most is that getting into college and maximizing aid is very much a game. It is. It's a game that you play. It's a rules-based game that you play. And to win, and what I mean by win, so a lot of people think winning is my kid got into college, got into their dream school. That's actually not winning. The win is I got into a school and they gave me a truckload of money. Right? In my book, that's the win.
That's winning.
And so when I use the game analogy or any sports analogy, I use it because you have to remember that the way that colleges look at families, the way that colleges look at students, it is not in of the student themselves. I can't tell you how often parents say, but my kid has a+ average and great test scores and does all these extracurriculars. Why didn't he or she get in or get more money or whatever? Because they're not looking at the student themselves. It's always comparing to the other people in the college applicant pool. So even if your son or daughter is valedictorian at their high school, which is a great result, but they apply to a school where all other valedictorians apply, they're just average.
Yep.
Right? And so that's important to remember. So to get the most aid and all this stuff, you want to play to the limit of the rules. And so even things like families will say, well, we're not going to fill out the financial aid because we're not going to get any money anyway, we're too rich or whatever. But there's even rules around that. And so because it's all a comparison. And so to that specific item, if I have the joke is I tell families, if you hear of another family whose son or daughter is going to apply to the same college that your son or daughter is going to, and they say, oh, we're not going to fill out the financial aid forms, or we're not going to do these other things, I hope to get in, there's only one thing you should say to them. Thank you. Right? Because if you're not going to do these things, you're going to increase my chances are, the original family's chances of getting in, getting more money, right? Because what the other family is saying is, hey, I don't want to play to limit rules, so I don't need the money, or I don't want to whatever. So it just makes your chances better. So pre-pandemic, give them a hug, high five them, shake their hand, bake them some cookies, whatever.
Right.
And when they ask you why you're so nice, just, hey, I'm just a nice person.
Yeah. Thanks so much for giving my kid a better chance. But you're right, because you say it's all, oh, I have $1 million in the bank, I'm not going to bother to apply for financial aid. Well, everybody else that's applying might have $50 million in the bank, and you're just like some pauper on the side of the road for them, Yeah,
Exactly.
it's all relative.
It's all relative. Yeah. So that's the biggest thing that I think that family, probably one of the biggest misconceptions. Like, hey, my kid does X, Y, and Z, and my kid's awesome. While every single other parent out there is saying the same exact thing. And colleges don't base their decisions on kids in of themselves. I mean, I'm very generalizing here, right? But really at the end of the day, they're comparing student number one to student number two to student number three.
Right. Not to the national average. Right.
Exactly.
Yeah.
Exactly.
No, that's so, Jack, I know a lot of people listening need you. I mean, how can they get in touch with you?
Yeah, the best way to get in touch with me is actually via email. They can email me at Jack, Jack, at innovativewealth.com. Or they can follow me on LinkedIn. Actually, I post a video podcast each week and I share a ton of information. Jack Wang, Innovative Wealth, college age strategist. I don't know what the exact terms are that you search, but Jack Wang
Well, that's all
college.
right. I'm going to put all your links on the
Right.
the show page anyway, so don't worry about that piece of it.
Yeah. Thanks.
Awesome. Jack, thank you so much. I mean, I really found this conversation illuminating, and I can imagine that if I had school age kids, I'd really be even more fired up about it. So thank you for being here and sharing this with us. And thank you, listener, for listening. I know you have a choice of, I don't know, 2 million podcasts that you could go to today. So we're really psyched and happy that you're here. And please share this episode and share Jack's wisdom with somebody you know. who can really use it. And see you next week.